Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is May. Well, it's May. It's May 3rd. I am like not all on already today, aren't I? That's like I was sitting there. I'm like, what is the day? It's 6:20. No, it's May 3rd. It's May 3rd today. British holiday May Day. So overnight action has been a little subdued. Sorry, Ninja Trader's still loading up here. I'm stalling for Ninja Trader to pop up. Okay, here we go. So on Friday, a little bit of a down day. Just a little bit after we had this huge like down day and then recovery back up and then overnight down. And now in the overnight a little bit higher. I mean, like, it's funny, you go to CNBC and they're like, Dow futures gained 300 points, yada yada. It's so great. Well, I mean, okay, if you say so. Not really much going on. But the Treasuries turning a little bearish again. This could be a concern if the Treasuries start really pressing this week. Things could get interesting. I think that there is a lot more concern about inflation this week than in previous weeks. So, in particular, Warren Buffett and Charlie Munger. Man, the news talking like Warren Buffett's going to keel over any day now, or, you know, because they're talking about who's going to succeed at the company. I think the company's in good hands and that their strategy and everything has been well taught to younger people and that Berkshire will continue in perpetuity. But they were talking in their little, shareholder meeting that they were seeing costs rising everywhere and that they were seeing inflation everywhere. So everybody's kind of sitting here going like, like it's not in the CPI, but the Fed, like, we're getting inflation and it's a problem. So that's the Treasuries. Oil, I'm seeing a little bit of issues in oil because of the India just getting hit so hard. Man, India is getting destroyed by COVID right now. It's pretty scary. So that's one of the major things going on in oil. And maybe OPEC cuts, maybe they don't. I don't know. Gold and silver both doing well today because the dollar is getting destroyed. I'll show you that in a second. Here's copper. Copper, down a little bit, but still up near its highs. Here's our dollar. Oh, well, so the dollar had a pretty significant rise on Friday, so some end of month rebalancing back into the dollar. But now this morning, the dollar getting hit, and this time at least, silver and gold following up pretty aggressively off of it. So we're going to want to keep an eye on that. We're coming right into the 91 level, so we'll see how they react to that. And then we do have some economic news coming through, right? So we get the market manufacturing PMIs at 7:45, 9:45 Eastern time, and then at 10 Eastern time we get the ISM manufacturing numbers. So, and then construction spending. So we got some news coming. It is the first week of the month. So if we come back over here, filter, I just want to show U.S. news and show me the whole week. Yeah, we've got a pretty decent schedule, right? So we got, the numbers I talked about today. Tomorrow we got trade balance and factory orders. Then after that, PMIs. ADP, of course. Challenger job cuts, unemployment claims, non-farm, productivity number, yeah. And then the big one, the non-farm employment change on Friday. So first week of the month, always pretty good for news. So that's kind of the game plan. So today, we're definitely going to be watching very carefully at the open because, since the London in particular was closed, we should be cognizant of any kind of moves, more significant moves that we might see around the equities open, particularly in the different commodities like metals, London markets being more influential for metals. So, and turn on the Texas speech. How are you guys doing? Good morning, Bill. Good morning, Win. I read that the price of diapers is likely to skyrocket. It's a bit early for Asher to get potty trained, especially because he is a boy. Do you guys use cloth? Well, we have some cloth diapers, but we haven't been using them. Maybe we will. Let's see if I can find anything about that. One thing that I was that you've been seeing around is, that we actually are seeing some inflation at like home goods, but you wouldn't know it because the price of the item has stayed the same, but the amount that they're putting in it is less, which is pretty, I don't know if that's, how do they track that sort of stuff in CPI? But I think the CPI costs more like food inflation, which, whatever. Inflation, the thing is that inflation, we might not really know. We might not really get any kind of real inflation number until like July. That's the thing that's kind of scary to me, is that because of the housing moratorium, people can't like really raise rents. And I think that as soon as that moratorium ends, that's the first thing they're going to do is they're going to raise all their rents. And then all at once the CPI will jump and it'll be huge. It'll be more than they expect, but they'll still say it's transitory. But Greg Abel is next in line for Berkshire. He is a Canadian businessman, chair and CEO of Berkshire Hathaway Energy and vice chair of non-insurance operations of Berkshire Hathaway since January. Yep. So, Uzi, when I worked grocery retail, small inflation was common. The store had its own brands and manufacturing, so it was very noticeable in those products. Interesting. I feel like something has changed, that my screen is a little further over than normal. I don't know. I'm like turning my head all the way over here, and I'm like, I don't want to do that. Yeah, that's probably always been a thing, though, yeah. Probably ebbs and flows. But it's really going to be that housing number. But the thing is that, like Berkshire Hathaway, they were like, this doesn't look transitory to us, right? So the Federal Reserve is saying prices are going up because supply constraints. But I think a lot of people are saying, oh, it's not just supply constraints. Like the ones that have supply constraints, the inflation is like mondo crazy. But everything is seeing some degree of inflation. Well, on the open there, pretty good move up in the Treasuries. So that, we're saying if they were to be bearish, because they were a little bearish overnight, that could be double plus ungood for the rest of the market. But it looks like for now we're okay. Bids just rampantly stacking in CB. Wow. Well, so remind me, it was Friday, was it? Yeah, it was Friday when we saw, off of some of those initial numbers and everything, things dropped, and then the whole rest of the session, it was nothing but bids. And so now here again today, they come in right off of the open, we're seeing bids. And you gotta wonder, like, who would be bidding in the Treasuries? Why? I win soon. Do you remember that? I'm interested in this story. I keep track of my friends at Epic Games, even though they've kind of made me mad a few times. Some of my friends are like, "Oh, Epic Games, I absolutely hate them. Want nothing to do with them anymore." I'm kind of like, well, listen, as long as I'm making a good game, I'm just gonna take it. But the so-called walled garden of Apple App Store privately held Epic charges that the $2.2 trillion market cap Apple has transformed a once tiny digital storefront into an illegal monopoly. Apple takes a commission of 15 to 30% on purchases made within apps. Apple denies Epic's claims. Uzi says, I don't know, you're better at that. What, remembering what happened last Friday? I don't know if I'm particularly great at that. That's the funny thing. Man, here's what I think I'm good at. I think what I'm good at is when something is changed, noticing and adjusting to the new reality. I think that most people want to stick to what they were doing before, and they're not flexible enough. And that doesn't mean that I always catch it, because I can think of a couple of times here recently with news where there was a significant piece of news. Like with GameStop, for instance. GameStop, they told us that the share floats dropped and, when the price came back down. But, I didn't react to it. I was like, oh, it doesn't matter. And then later, when I looked at it more and more, I was like, oh, crap. Crap. Or like when they shut down trading at the Robinhood, I was like, they'll be back tomorrow. I'll be fine. No, it was not fine. It was not fine. So, but there are other times when pieces of news come through and it shakes things up and people don't react to it fast enough, But no determining who is doing what and why. Oh, I get what you mean. Yeah. I'm sometimes okay at that. In this particular case, though, I don't think that we have any... Oh, actually, I take that back. It looks to me like we are seeing a move in the Japanese yen, and that is coinciding with the move up that we are seeing in Treasuries. So that comes back to this whole thing right here, which is like, should we try and make more room for our 6J? I don't really use the alert columns. What do you think? What if we come in here? What if we come into the ZB here? We say no more alert column. No more. And then I'll just move this over just a little bit. And just be only the point bit. There we go. Oh, doesn't need to be that extreme. Oops. That is not what we wanted. Okay. Oil drop towards 66 barrel Monday is concerned about. Yep. Mentioned that one. Nassim Taleb still has some little mini lectures. Good. We should go to his YouTube channel today and watch them. When professional sell-side researchers are told to write a lengthy report on Bitcoin, you get this, quote, Bitcoin could still increase in value, but it could also just as easily go the other way, says Rabobank. Well, I think I know why Zero Hedge is saying what they're saying about that, but they're wrong. So what is going to cause Bitcoin to move up or down in price? That people want it or don't want it? How can you predict that? You really can't. You really can't know how viral. I mean, it's already like a widespread thing. So I'm kind of a little skeptical about how much further Bitcoin itself can go. It looks to me like everything is just percolating down into altcoins, right? Well, The Zero Hedge thinks, the dollar is getting destroyed and cryptocurrencies will save us. No. Sorry. There's a lot of problems with cryptocurrencies being that, right? And I'm not convinced that the rise in cryptocurrencies that we've seen has really been because of dollar debasement. I think that it's more because of Federal Reserve easy monetary policy creating rampant speculation. Maybe I'm nuts and not crazy. The Air Force had me tested, but each April something happens in the news, so the summer gas prices go higher. I'm kind of teasing, but India is important oil. Yeah, I didn't realize how much oil they used, right? I don't know what the deal is, but for some reason, my body doesn't want to turn that far to read what you guys are saying. What's with that? Because normally I'm sitting here like this, right? Well, we could turn on auto reading. Do you sleep on the... No, I don't think so. Sleeping was a little weird though, because I was like having night sweats and stuff. Should probably be paying attention to these treasuries a little bit more here, huh? That's a sign of insulin resistance. I really just don't think that I have insulin resistance, though. Everything that I got going is telling me that my body is a little bit too sensitive. LL Rain on CNBC. This is not transitory, really. Is there a single prominent economic commentator besides the people at the Federal Reserve that believe that the inflation will be transitory? Morning, Keller. It is actually fairly normal for me to sweat at night if I'm just too hot. If it's not exactly the right temperature, then it's hard for me to sleep, basically. Oh, it's fairly quiet across the board, but these treasuries are definitely churning. Like, you see that the flow that we're seeing in the 10-year in particular, all of the limit orders shuffling around and stuff, like that is a market that's doing something. You can keep track for one. Well, what I need to do is I need to go get a blood test. My wife was like, I think those are expensive, but I looked it up online. You can get them dirt cheap, so need to go get a blood test. Spot the robot dog is set to patrol the world's dangerous industrial websites. Oh boy. See, they got through that 0-2 real easy. Well, that one was a little different because that time they all ticked up, but the Japanese yen was not with them. And curiously enough, we're not seeing silver and gold come down off of it either. Yeah, I mentioned that too. The manufacturing surveys that we're having today. Sounds like micro Bitcoin futures are popular at the moment, eh? Okay, that's pretty good. The 6J is a little thicker of an instrument than I thought it was. It kind of looks like that offers are starting to hold firm, especially in the 10-year there. If you haven't hit the like button, please punch that baby hard. Watch as the channel numbers and do. I thought you were like, why are you talking about punching babies, When? What the hell? Punch the like button hard. So much buying, right? Some sort of large meta orders coming in. Now, they are coming up into the limits already. So that kind of suggests to me that we probably will go up a little further to like 07 maybe. If we're all reading it right, and assuming that there's not another meta order coming the other way, right? So I'm curious, do the currency futures influence the Forex market at all? So if someone hammers down the futures market, does the currency also drop in the Forex market due to algos? I don't know. Let's see if we can find out. Price discovery, Forex market futures. Good. We got our one tick. Google Scholar. Here we go. News announcements and price discovery in foreign exchange spot and futures markets. This paper studies competition and price discovery between spot and futures rates for the Euro USD and JPY USD markets around scheduled macroeconomic announcements. Using both the information shares approach and the common factor component weight approach for future prices from the CME, as well as still prices from spot trading on the electronic brokering service, we gauge how foreign exchange spot and futures market respond to new surprises. The results show that the spot rates provide more price discovery than do the CME futures rates overall. However, the contribution of the futures rate to price discovery increases in the time surrounding the macroeconomic announcement releases. Okay, so that's about that. That's kind of what I thought. I was thinking about just saying that, but then I was like, well, I don't actually know that for sure. And I bet you we could find out really easily because this is something that gets studied a lot. So it sounds to me that like if you're trading like immediately after the news, they like to use the futures. Otherwise, it tends to happen on the Forex market and the futures are mostly following the future. Okay, so you see that the 10 years going there. So where did I take it off at? It was 04? Oh, it was 03 half. Oh, okay. So they've gone one tick higher and then a little bit into 2. Now, I don't care that it does that. I'm just trying to keep track of like, where were we? I should probably reset it right there. Honestly, currency futures is a market I know almost nothing about, really have no idea how they work and why you should trade them. Okay, so let's talk about it. Here's what I know about it, okay? Number one, the Forex market is far and away the largest driver of currency trading. And in particular, when I say the Forex market, I'm talking about interbank trades. So what really moves things is banks trading amongst themselves. That's why very often in Forex, you'll see like really fast moves. Okay. It's also why in futures markets, all of the Forex traders, they can't really do any kind of order flow analysis. They don't get volume. It's not reported. Okay. So that's the first thing. So why have they futures? Well, say you're trading the 10-year treasury, right? Say you're trading a 10-year treasury, you're outright or you're doing a spread or whatever, and you're trading the 10-year treasury because of something that you think the Federal Reserve is going to do that affects the yield curve, right? Well, if you want to trade just that one change in the yield curve, you don't want to be affected by some sort of potential policy change in Japan. What are you supposed to do? Well, the obvious answer would be you would go and hedge yourself against it, right? But how are you going to do that? Because you don't want to go and do it through Forex. You have the Forex trade going over here and you got a trade going on the CME over here. It doesn't make sense, right? So what would you do? You would come in and you would hedge yourself with the CME spot futures, right? So as far as I understand, there's definitely is price discovery. I've literally watched people, and I mean like literally watched people go in and hit the like cancel their orders and then hit the bids and push price down. When I worked for Goldman Sachs, they showed me how that functionality works. It's only for like one tick, but still, they showed me how they do that. So it's not like the futures can't have some effect, but I think that the futures are mostly there for hedging, right? But because they're there for hedging, we can still use them as a good correlated instrument, right? So if I saw something come in to push the 6J all the way down there, then I would definitely take note of that and wonder what's going on here in the Treasury. But I suspect that it could be the other way around. I suspect that what could be happening here is that there is some really strong demand coming into the Treasuries for some reason, and the 6J is following them. That could be the case too. The thing that I find particularly interesting about this move is that I'm not seeing silver and gold move. So, well, I guess silver and gold are moving up, and the Treasuries tend to move up, huh? Well, silver and gold were kind of already going. I guess they are moving in tandem. So all of the Treasury correlated instruments are moving. Well, and copper is too. But what is it that would be going on that would make them just want to buy Treasuries? BBX stock was a fun pump on Friday. I don't know. But at the moment, as far as I can tell, the Treasuries are the drivers here. That ZB in particular is just carried out here, right? Oh my gosh, I'm sorry. I'm like all sleepy. So we should keep track of that. Oh man, when those Treasuries start to get them strong trends and you come into a spot where there's maybe a little bit of back and forth, you can get those one ticks easily. It seems like in those areas, where I've done well with this trade is when we're getting those strong Treasury trends. It's like the old days, eh? Uzi? EPA says they're going to propose a limit on hydrofluorocarbons used in refrigeration and stuff. Short Maytag. Do they even still exist? I think that it would be a different company. I think that I don't know a whole lot about hydrofluorocarbons, but when it was like the ozone, it wasn't the refrigerator company that was on the hook. It was the people that manufacture Freon, like DuPont and stuff. Uzi just smiles. Oh, guys. And Kevin, he would remember too. Remember when you just come in every day and the Treasuries would just pick one direction and just go that one direction. And that didn't mean that it was easy. No. But it sure was fun. Sure was fun to trade it when the Treasuries were moving. Had big trends. Ethereum 3142. Yeah, Ethereum is hyper crazy this weekend. So Bitcoin itself hasn't been too great. They're still kind of struggling with the 5,500-ish area, right? But Ethereum, man, just won't stop. Yes, and Bitcoin micros do start trading today. And it sounds like that the amount of volume that they've been getting for compared to what you would normally get, that they're trading pretty well, in fact. My argument is still I have no interest in trading them because how are you going to know which way it's going to go? On a micro time frame, I don't really think that there's a good trade for micro Bitcoin. I feel sleepy. You mean during the beginning of the pandemic when the book was super thin like your ZN with 300? No. Long before that. Like, so when we started in 2016, it was pretty good. you know, and then things like really slowed down 2017, 2018, and then they kind of pick back up again. So like when the volatility gets really low because of the Federal Reserve, then the Treasuries are just an awful trade. But when things are going normal, you get pretty good. Or, you know, like all the time before that, between 2008 and 2016, like that 8-year period, Treasuries moved a lot, right? Rabobank are failing, always be bailing. Financial system justifies nausea. Rabobank hasn't been particularly positive on monetary policy, has it? Squawk Box. If the Fed is forced to slam on the brakes later by not moving early enough, that is bad news for the economy. That is bad news for the market. Ella Rain on the Federal Reserve's inflation view. That is why it's important for the Fed to be more open-minded about the nature of inflation. Thank you. I agree with him. You could always try out the German bun. Should be as thick as the ZB, maybe a bit large. But then I'd have to pay for Eurex data. Breathe, Seth, breathe. So quiet is kind of still suggesting to me that I could have gotten that right there. So you notice that these two have ticked up, but this one hasn't. So like if I don't think that I'll get filled there, and if I do get filled there, the situation may have changed. But it kind of looks like that the 10-year wants to tick up, and that is going to get pulled into 05 by the other two. Patrick Rooney asks, a boredom rally, no idea what goosed ultras. So we're not the only ones watching this huge move up in the treasuries and wondering where's the beef. I mean, I guess this is technically the beef, and there's I don't know. Stop paying for Comex plus NYMEX data and get Eurex instead. I guess NYMEX plus Comex should be a bit cheaper though. Yeah, I just do the bundle for the $15 or whatever. But I don't think that the bund would really be all that different from the 10-year, right? I mean, I think they're all kind of suffering from the same problem, really. Can you cancel that? Because I'm just so afraid that the 5-year or the 30-year is going to tick down, and they're going to fill me and then push against me. Nice open on oil. Oh, yeah. They're moving around a bit. Man, I am, like, I don't know what my deal is, but, like, I'm having a hard time even keeping my eyes straight. I know, I'm sorry, that's probably not, the thing that, I hope I'm not making anybody else tired, but I always try and point out what my state of mind is so that when I'm watching later, I can go, okay. Here's what's going on. I'm going several months from now. Oh, why didn't you take advantage of this move or that move? And then you see why, right? But I feel like just going back to sleep at the moment. Holy crap. I'm going to stand up.
Kevin Wimmer says Sleepy says confirmed. Joe's long LSOT brother.
Long LSOT brother. See, so they're kind of trickling into it a little bit. These did tick down though, right? Like I was reading, I was like, maybe the right trade is the 5 years should come back. It did. I have not been vaccinated. I had it. Oh my gosh, my brother-in-law. Well, didn't he catch it? I don't recall. Oh no, he did catch it. Oh, that's right. My brother-in-law caught it after we did. For me, and when I caught it, it was like kind of like a fever for 2 days and like no big deal. Was honestly like the mildest flu I've ever had. When my in-laws caught it, they didn't feel very good, but maybe they exaggerate, for the attention. I don't know, but so they went and got the vaccine now, and yeah, pretty adverse reaction to it. And I'm like, yeah, because your body already has some immunity to it. And the whole thing with it is that your body overreacts to it. So like, yeah, would not feel good. So yeah, he got vaccinated and was out for a week. Really hate such opens in oil. Super quick dump and reversal. No real way to get a good long afterwards. Well, so I don't know why oil is doing what it's doing. But one of the things that I would watch out for on instruments on the open is that sometimes people need to make a move based on what happened overnight that they just didn't have the liquidity to do earlier. I think this would be more likely in stocks than in oil, but they can make a move that is contrary to the overall look of the day, That's why it's so very, very often in equities, you'll get this sell-off on the open. Because all of the stocks that didn't do well, they're bailing on. They bail on those first. The index comes down a little bit, and then they readjust that money into winners. Stickball, hey, how are you? Yawn. And let's remember today for the E-mini that we'll probably have an okay open because there's a little bit of stuff pent up because the London markets weren't open today. It's for May Day. But we want to be a little bit careful on the open because there are manufacturing numbers. What are they again? PMIs. PMI is the ISM numbers. Yes, because it's holding winners is what makes and breaks the stock market indexes. Yeah. If one of the things, if I was going to go back and tell earlier, Seth, things that I didn't realize right away. Indexes move very different to stocks. It's a very different game. It's a harder game, the commodities and stuff, really. Because to pick which stock is going to go and what the macroeconomic outlay looks like is a lot easier than trying to find a commodity that's trending like that. I noticed that there is a difference, of course, but is it really that big? I really think it is. I think that there are a lot of things that you can get away with in stocks that you can't get away with in the futures. So in particular, a lot of these momentum strategies that people try and use in stocks, I don't find that they work very well in commodities. So like the thing is that most of the strategies that you see in the market today are really like risk premium strategies, which is to say that the way they make money is by taking on risks that other people aren't willing to take. And in the current meta, there is a real rush to, how do you put it? To be as reckless as possible, Always trying to outdo each other, trying to put on more risks so that you make more than everybody else. Like, it's really quite crazy. Like, you talking about how a stock can just print 30 green or red candles in a row? Yeah, sure. Well, in a stock, you can get a situation where it will go up and it'll just do nothing but go up for years, right? Whereas in a commodity, they're so much more mean reverting. They're just enough mean reversion to screw you up. So when they come into indexes, when they come into certain individual commodities and they try and run those kinds of strategies, they don't necessarily work. And you find that they have to hold a much larger stop and hold for a much longer period to make the money. But even then, like, one of the big contentions that I would make is things that I believe retail traders don't realize is they'll come up to a system and they'll say, okay, this system seems to be working. What are you doing? How are you doing it? And they'll say, oh, well, I use technical analysis, this and that. And then they go, oh, see, look, technical analysis works. Well, how do you know that those gains aren't just them taking big risks? So there was this thread on Futures.io where this guy, he had built his account up to from 4K to 70K, and now it's 7K. So he lost most of it. And most of the people over there are like, oh, well, you did so good. That's like such a big accomplishment anyways. And I'm sitting there like, it was inevitable. You build the account from 5K to 70K. You were taking excessive risks, and it was going to catch up to you sooner or later. Because you don't even realize that's what you're doing. Like, if that's what you're doing, the entry signal that you're getting on those don't really matter. What people say on those don't really actually matter. What matters is how you manage tail risk. Do you have an edge to manage tail risk? And I've been doing some research over the weekend, but I couldn't find anything that was like, an edge that we could use to manage tail risk better, to detect and manage tail risk. But that's where their edge is coming from. They don't even realize it often. Oh my gosh, it's like so hard to keep my eyes open. This is so weird. Like, here, I'm talking and I want to go, what do you mean by tail risk? Bill Grooves asks. By the way, welcome to the stream. Okay, so when I say a tail risk, what I mean is that if we have a certain type of event, let's just say the range of the day. Let's just choose something really simple. The range of the day in the S&P 500, right? You get this distribution like this. Okay. Now, a normal Gaussian distribution would be something like this. right? Where they come in and they go between here and here. Oops, you know what? Let me redraw that line. We've been talking about this a lot. Okay. So they'll come in and they'll say between here and here is 70% of all measurements if it was a Gaussian distribution. But these distributions often have long and fat tails. And that is the case in the for range, daily range of the S&P 500, is that there are days, like a normal day is like 20 points, and then you have days over here that are like 30 times that, that are super insane, right? And so not only are there fat tails, but they're long and fat tails, because there's more entries in here and here than you would expect there to be. Okay. So what ends up happening is if you have a strategy that is based on taking on risk, so that means like a really simple example would be you have a large stop. You have a stop of like 10, a 10-point stop and a 5-point target. So you're allowing it to go a lot further. Okay, it doesn't have to go very far. It only has to go 5 points to catch your win, and it does that pretty much every day now. Whereas for your loser, it goes 10 points. It's harder for it to happen. So you would naturally have a high win rate off of a strategy like that, somewhere in the 70 to 80% range. Okay, but what happens is the tail risks. So when you get a day that is a tail day, that is, the range is really long, your strategy is going to tell you, okay, it shouldn't go any further. I should reverse and hold a really big stop. And then it doesn't, and that strategy gets blown out over and over and over and over again, because it's like this trend down day. Like normally you would be like, just buy it and have a 20-tick stop, right? But if you take that trade every time that it occurs, you don't actually have a positive expectancy. And a lot of retail traders won't realize that this is the case because they don't pick up a long enough sample. Like when they go and they do their testing, like usually they don't even back test it. But if they do back test it, they don't back test it back far enough. So you don't actually see the tails, right? Because the tails are like a once, the really fat ones might be a once a year event, right? So if you're going to use a strategy like that, then the only thing that's really going to be the determining factor between whether or not you make money or not is recognizing when you're having a day that ends up being on that tail and how you react in response. So a lot of these real big hotshot traders, that's really basically what it comes down to, is they knew what was going on when they were having a tail day and they were on the right side of that tail. So they caught a really huge winner off of it instead, right? So that's what I mean by how do you manage the tails. I'm picking up what you're putting down. Thank you. Stick, I came from crypto to looking at stocks and I noticed it pretty straight away. So I'm thinking there's a bigger realization and that it's important that you have to tell your younger self. I notice how stocks move strange very quickly, and earlier me then has only observed crypto price action. Well, so what happened was this. First, you come in, technical analysis. I mean, I used to believe in technical analysis at one point. When I learned, the more I've learned about, the thing is that like I believed in technical analysis at one point, and then I learned a lot about order flow, and I kind of realized, okay, standard technical patterns don't exist, but you can still find inefficiencies in the market. Yes. And then the further along that we've gone, the more we've realized any kind of inefficiency that you're going to notice on the tape probably isn't going to be a very good one. It probably isn't going to be very reliable, and that is the case. So But originally I believed in technical analysis. So one of the things that they tell you in technical analysis is it works for every stock and it works at every time frame and all of these things, right? So, you just kind of like accept those sorts of things. But as I've been going along, like a great example would be on different time frames. So when you go and you do long only moving average rules with equities, you do improve your overall profit a little bit. There's other issues with those kinds of strategies, though. There's downsides to those kinds of strategies. Over the past several years, they've worked, but there are downsides to them, okay? But they can work, okay? Trying to apply the same kind of moving average strategy to a 1-minute chart is just an absolute disaster. If you try and take the cross of the moving average, you're going to win. You're going to lose. You're going to lose the vast majority of the time, right? So on different time frames, does it work? No. Okay. So then it's the same thing with order flow. So we come in and we say, oh, well, the technicals for any asset should be the same. And I just have to make small adjustments for each instrument. I don't think it's even close to that. I think that the kind of patterns that you tend to see are completely different. The patterns that I see in the Treasury and the patterns that I see in the equity indexes are completely different. So much so that it is very difficult to switch between reading them, right? Trying to read the Treasuries a ton and then move over to the equity indexes and trade that a ton, that's hard. Or trading them watching them at the same time. Unless you consciously understand where the differences are. It's like lighting Imagine the pitch black stadium better than nothing, but you aren't coming out with detailed schematics such that you can recreate everything inside. Yeah. Well, and that's kind of the issue, is that when I talk about a technical inefficiency, I specifically mean some sort of a pattern setup or condition that is reliably leads to something happening afterwards. A piece of data that you can trade off of, and it has a high probability of it happening in the future. And I think the issue is that you've got the whole field of human knowledge about trading is this big, huge circle. And then you're trading this one teeny, tiny little technical edge that you've found, right? When there's this whole world over here called correlations that has more of an impact. There's this whole world called news, right? This has an impact. And you're trying to just look at this one thing and determine what's going to happen. Well, you're never going to be successful with that because, there's so much noise coming from everywhere else that how do you even know how this one little part is actually behaving? You know what I mean? So, even if you had a ton of little technical edges, you still got this teeny tiny little thing that, collection on its own isn't going to be particularly useful. So I think that it's much better to find a larger edge, like news and correlations and that sort of a thing, understanding of markets. And then you can potentially use some technicals to kind of, manage your risk a little bit. So I can come in and I can say, well, right now, these are the swings that we're having and these are the trends that we're having. So if I sell the Treasury right now, that's less likely to work out, but I have better risk reward off of it, right? Okay, but I don't want to necessarily trade it unless I know, because maybe that was just some buyer guy and it's done and now they're going to settle all the way back down. Or a piece of news came out that saw all the way back down. Whatever it is, that would determine whether you want to go long or short. So trying to trade just off of the technicals is not going to work out for you very well. And all of the studies that we've got suggest that it doesn't. People that trade that way aren't successful. Oh man. You would think that talking would have me really amped up and awake, but I'm just not there, man. I don't know what my deal is. And not go to bed on time, I don't know. Let's hear what was Win saying. While you are describing pattern recognition, depending on your personality type, pattern recognition is speculators that Super Target has been patterning since I began listening to him. Heuristic bias means someone may pattern recognition, but speculators that learned critical thinking skills in his degree program. He also learned to falsify his confirmation bias, or I hope he has. Well, yeah. The issue, I think one of the big issues with confirmation bias is that we all kind of know to watch out for confirmation bias and deal with it. But so often when we are in the moment, you don't, there's too many things to remember all in the moment, Your outlook on NQ? Well, I don't know. So the thing is, there's a lot of news to come out today. So it would be kind of foolish for me, Nick, to come in and say I think that NQ is going to move up or down today, because the biggest piece of information that we're going to get, biggest two pieces of information that we're going to get about whether we move up or down today hasn't been released to the market yet. What do you mean, Fernando, by a lot of news? You need to stop taking your meds? No, that's not it. Those medications would actually tend to keep you awake. What news, what time? Oh, okay, so we have in about 20 minutes, we will get the market manufacturing PMIs and manufacturing prices. So these are both going to be important. That's prices in particular because everybody's concerned about inflation, right? And then at the top of the hour, we've got ISM manufacturing new orders and manufacturing employment and construction spending. ISM manufacturing PMI. So there's, 1, 2, 3, 4, 5, 6 data points that we're going to get here in the next 30 minutes. There is also the law of small neighborhoods. People in studies will say crime is terrible, but not in their neighborhood. For example, people filter their perceptions through cultural lens. Well, I'm. Nick says, gotcha, so any new trade should be placed after 10 a.m.? Well, I wouldn't necessarily say that. But maybe when things open, we get a couple of data points here that make us think something about what's going on. That's why we've just kind of got to watch a bunch of different markets and kind of see something. Because if I see a market moving in a certain direction, like if I see the Treasuries really, really continue to buy, then I probably want to come over and buy the E-mini because those lower rates are going to help. If there was something that suggests to me that what's going on in Treasuries is really going to hold for a long time, is not transitory at all. Powell speaks also, but you're probably not saying much. Oh yeah, but that's not for a really, really long time. But, the question I would always ask is, why is it going to do a thing, right? How do I know that we're more likely to go up than we are to go down? Because just saying, well, it's been going up all morning, from every test that I've done, that doesn't work. So We want to look for like a real reason for it to move. And then try and take advantage of a skewed risk reward at that point. 4 minutes to market stop. Well, I should stand up again and try and wake up. Oh my gosh. What's wrong? I just don't get it. We are bombarded with military grade persuasion from 100 directions. Our biases are mostly assigned to us by whichever institutions which we expose ourselves. So yes and no. So for the average person, yes. Part of my goal here is to try and help you guys be so engaged in what is going on in the news and understanding what's going on that you aren't so susceptible to those kinds of biases, right? Once you understand how the media works and how they tend to operate, it's quite easy to see when the manipulation, you know. That's why it's always driven me so nuts, because I can remember from the earliest days of Diggs. So like 2000, like I can go back to like 2008, maybe even 2006 and be like, yeah, people manipulate social media and screw with people. And it can apply to trading too. So we kind of have to know. So like a great example would be the trade the other week when Joe Biden was going to raise capital gains taxes, and the markets absolutely puked on it. But then it was like, okay, guys, but probably can't even pass it, right? They want to make a big deal out of it so that their supporters like them. But if you're paying attention, you know that the chances of it passing are like zilch. So it's not something to worry about. Let me stand around and walk up for a little bit before we open here. Oh, it's 15 seconds. Oh my gosh. The trick is to be selective about which institutions we choose to expose ourselves to. Oh, I wouldn't even agree with that, to be honest with you, Andrew. I would say read absolutely everything that you can. It's the cross-checking of a wide variety of sources that's really does the best job, for me at least, of filtering things and seeing when there's some manipulation and when there's not. That's getting difficult, but so example, there was a story that Rudy Giuliani had been warned by the FBI or one of those agencies that he was the target of Russian disinformation or something like that. And Rudy Giuliani said, no, that's not true. And the Washington Post reported it, and then another paper, I forget who was, also reported it. So you come in and you say, oh, okay, here's multiple outlets saying the thing, and they're saying the same thing, and they say that they independently corroborated it. Well, the reality is that they had both been fed the same absolute lie by one source. So you get this impression that you're getting multiple sources confirming something, but in reality, it's all coming from one place. And in this particular instance, in fact, the outlets appear to be coordinating with each other. So they both know that the other has the story and they're going to post it. And they kind of use that to their advantage to give their story credibility by releasing it at the same time to trick you. And that messed up. Depends on the mental energy you want to devote to your filtration system. Yeah. But for the purposes of trading, oh, by the way, pretty slow open so far, right? For the purpose of trading, you can narrow that down pretty well. I have to say, I feel that business news sources are just objectively better than other. What do you think about Rudy Giuliani? I don't really think much about him, to be honest. I don't think about him very much. I think that the left focuses on him very heavily because they think that they've got something on him. They think that Rudy Giuliani is going to be the linchpin that finally leads to them proving that Russian collusion and bringing down Donald Trump. Because even though Donald Trump is not in office, well, when he could run again, in fact, he's kind of talking like he is going to run again, which I think is kind of funny. But I think that the larger thing is that they never got the in-court confirmation that Donald Trump is a Russian asset. That's what they really want. That's what they really want. And they think that Rudy Giuliani is going to give it to them. That's what I think. He's an easy target. Do you believe he's innocent? I don't know enough about all of the charges. I have to say, I think that the whole thing is like a really big mess, enough for me to be wondering what's really going on there. But I don't care enough about it to like really dig into it. Global news mega corporations would be an example of an institution to never expose oneself to. Well, I think you got to know what they're thinking about so that you can know that they're wrong. You know? Well, it's like Steve says, right? Let me get Steve on here. Guys, it's so easy. Listen, here's the trick. Look at me, like a full screen here, guys. Don't think for yourself, okay? Just look at the chart and just do what it tells you to. That's all you got to do, guys. It's that easy. Don't be poor. It's a vast left-wing conspiracy. No. Are you crazy? Maybe. Well, really, like the whole problem is that in human behavior, we have heuristics. You know, we've developed heuristics because it is impossible for you to go through and verify every teeny tiny little fact in order to function, right? So we've developed heuristics. It's an evolutionary advantage that allows us to like literally function in life. And it's kind of hard to go through and think for yourself on every little issue and be able to question what's real and what's not, and still be able to find true information, verify information for yourself. Look at it and say, okay, yeah, they've verified that. I can see the empirical evidence. That's true. I can use that. And knowing which sorts of things you kind of really need to dig into and which kinds of things you don't. Like that's all experience on you, right? That's all experience that you need to learn. And people don't want to do that. But if you're going to be a professional, if you're going to try and make money from doing this, you really don't have a choice. You have to be an expert on the information. And what we find time and time again, and the reason I personally believe that the vast majority of retail traders fail at trading is because they don't really want to think for themselves. In fact, I'm going to bet you that the retail traders of the will just continue to get worse. That's what I think. I think that retail traders today probably don't do as well as retail traders in the 90s. Retail traders in the 90s probably don't do as well as retail traders from the 80s. And they probably don't do as well as retail traders from like the 50s. Now, part of that is because the market gets more efficient and large institutions are taking more of the money, and especially we've got to compete with robots. So that is one part of it, yes. But I think the other part of it is that it seems to me like we are teaching our kids to not think for themselves. Like we're not teaching, how do I say this? do we come in and say, okay, every time that you see something, you should try and verify it and look for empirical evidence to verify if that thing is correct? That's not what I see people being told these days. What I see people being told these days is search for it on the internet and find the institution that is we prefer and that we claim is reputable and just go off of what they say, right? So like with the pandemic, just listen to what the CDC says. Well, okay. They don't want you to think for yourself. They don't want you to go and look at the studies and say, this has been studied and this has not been studied and we don't really know this. And, is it okay to think that this is likely to be the case because that's what it's like for literally every other instance, But that's kind of like the level of thinking that you have to go to. And the younger generations are not used to doing that. They're not used to having to research things, Or like another great example is this whole movement that really saw a good number of millennials. Frankly, smart millennials, people that are entrepreneurs and thought leaders and stuff, saying the pandemic is going to transform the education industry because you can learn all of this stuff online and there's no reason to have in-person classes. And I'm sitting there thinking okay, yeah, you clearly never took an advanced field. You must have gone to business school and maybe didn't even finish through business school and then you're done. Because I tell you what, if you want to learn market microstructure, for instance, you would do much better. You'd do much better going to a studied university on that subject. Okay. If you want to learn computer engineering, you should go to university. You want to learn advanced calculus, you should go to university. There are just some of these things that are so advanced, it is so difficult to learn them through online classes. It really is. It really is. And, but what have we taught people? Well, everything that you can learn on the internet. Right? It should all just be one quick Google search and then you should be able to know everything. When the reality is that a lot of knowledge, you've really got to dive deep into it, right? Well, 5 minutes to the news. Emotional centers of the brain are rewired according to sense perception. Even if we know we're watching a fake movie or news story, images, sounds depicted still mingle the mind irreparably. Well, I kind of have an advantage there because Adderall suppresses my limbic system. What are you saying here, Win? People who believe in Bigfoot. Once upon a time, there was a crazy uncle in a barn. Now Uncle Ed finds other Uncle Eds in their barn online. Their confirmation biases each other. Well, but to me, if we're going into what we're sort of talking about, the tendency would be for people to say, well, what you should do is you should search for is Bigfoot real, and then it will take you to Snopes.com, and Snopes.com will tell you everything that you need to know about Bigfoot. Whereas what I'm saying is, if you were going to make Bigfoot your life, or it was somehow pertinent to how you make money, then it would be contingent upon you to understand everything about that subject, and that would require some deep study about those particular incidents, including preferably reading and watching primary sources, right? So here in this case, the claim is in retail trading is that you should trade off of a chart and that you can use technical patterns to trade, and that's how you make money. Okay. Well, if that's going to be your life's work, that's going to be your thing, don't you think that you should study it and understand it and actually have gone through all of the statistics, preferably yourself, to determine what the actual stats on these things are and how they behave? And yet the majority of retail traders don't do that. They want to read the book and say, okay, the book says to do this or that. And the book doesn't tell you why. The book doesn't provide you statistics or empirical evidence that that sort of a thing works. It just says, I'm an expert in this, trust me, and then trade it, right? And if you do that, you're always going to be behind the people that are actually doing the work themselves. Yep. Get what I'm on the main point I'm getting at? That's the goal here when we come in. That's what I'm looking for, is people that want to think for themselves, people that want to come up with theories about the market and test them, and people that realize that that's really hard and want to work on it together. That's the whole point of the stream, right? That's why it doesn't bother me at all if I come in and I say something where I question something, or we talk about a certain piece of evidence and somebody doesn't want to talk about it and they leave, because then that's like, well, you're not the kind of person that we're looking for, because the kind of person that we're looking for wants to study and do like empirical research on this stuff, right? There you go. Tom Nichols, The Death of Expertise shows how this rejection of experts has occurred, the openness of the internet. Wow, I think there's separate things, right? One thing is that people on the internet don't seem to, or there's a vast majority of people that don't really understand what it means to truly be an expert in something. Okay, they just don't really understand the difference of studying something for your whole life, right, versus what you can get off of a 10-minute Google search. Because people seem to think that you can just learn anything that you want in 30 minutes with Google. And it doesn't work that way. I'm sorry, but there's a lot of knowledge when you really start to get into advanced knowledge that is just not on the internet, right? But then there's this other side, which is that because of that, there's like almost this rejection of going and finding things out for yourself, you know? Because I think that people should reject, or at least be skeptical of what they hear by experts, and try and do their own research and find something. Because the places where the best edges that you're going to find are going to be the things where we think that we know something and we don't, right? There's going to be those situations where the experts all believe X thing and they're wrong, right? Like the biggest edge that you could possibly have right now, I believe, for on a longer time frame horizon is, will inflation be transitory or not? And the Federal Reserve says it won't be. But what if it's not? If it's not, and you have gone and you've learned some things, and through your own research, you're able to find some empirical evidence that suggests that it is not going to be transitory, and you trade off of that, and you make money off of that, that is going to be the biggest edge that you could possibly have in this market. And it's one that is going to be contrary to what the experts at the Federal Reserve say. Okay, so we did have the number come through, 57.2. It's a little bit lower than the previous reading. Oh, no, wait, that was a Canadian number. I'm still waiting. Market manufacturing, 60.5 versus 60.6. So this number was in line with the expectations. So they're kind of just chilling here still. The older I get, you start to recognize the professionals. Yeah. Well, I'll tell you what, one professional that I see that really knows his stuff is Nassim Taleb, right? Nassim Nicholas Taleb, whatever his name is. That guy knows his stuff, man. And we constantly see him arguing with people on Twitter about stuff. So people that don't know anything about the subjects think that he's wrong. I tell you, one of the things that's the most scary to me in our modern society is I'm seeing ideologies pop up where the truth basically doesn't matter, right? Like what is true and what is most effective in a certain situation doesn't matter. What matters is whether historically underprivileged groups benefit from it or not. That's really disturbing to me. You know what I mean? That is like a direct contradiction to my own philosophy of life, you know? And a society that was to function in that way, I would not last. I would refuse. I refuse. Emotion is one a complete victory over logic. Well, I don't even know if it's so much emotion, Andrew. I think that it's almost like an acknowledgement that they can't compete on merits. Well, not an acknowledgement. That's another section of it. I don't want to get that deep into it, but there are some people in this economy that believe in communism. Okay. And I believe that the reason they believe in communism is because they've gone and they've tried to participate in the economy, and because they never went and developed advanced skills, because they didn't put in the work to get their education and become good at something, they basically have got nothing now. And so they want to bring the system down because they can't compete. And they think that because they're underprivileged, that they should be given more now to balance things out. They want fairness they want equality of outcome, right? And they're literally willing to make big societal decisions on morals and other things based purely on that, rather than what has been shown to be effective and correct. And in some cases, there are people that want certain groups to be treated differently because they don't believe that group can perform on their own, which is like really messed up. That you would think, oh, X person, he needs, like, can you imagine if you were doing a task, you know, like you were going to build a playground or something, and they're divvying out the tasks, and they say, you know, Uzi, we need you to go and dig the holes. And then somebody else comes along and they say, oh no, Uzi needs to do Xing because he's too stupid. We need to make sure that he is given better stuff to build him up better so that we can have equality of outcome, you know? Don't you think that Uzi would be a little bit pissed if somebody said something like that, you know? It's like the discrimination of low expectations. Ugh. But that's the world that's kind of what I see people doing. And anybody that thinks that way is not going to be very effective at trading. Okay, so after the news, the news didn't really affect us very much. It looks like that the market is kind of moving up a little bit here now. I think that might just be like a we're bored kind of a move. It was a pretty good move. In a hierarchy, every employee tends to rise to his level of incompetence. Oh, yeah. I think the issue with that one is that there are different skills, and corporate America hasn't done a very good job at measuring and recognizing different kinds of skills. Like, how do you recognize and understand that you are good at managing people? Because I've seen people that are really good at it, and I've seen people that are really awful at it. And they don't hire people to be managers because they're good managers. Typically, they're for other reasons. So how do you determine that somebody is going to be a good manager and then select for that? It's a real problem. Yeah. Similarly, like really high level executive stuff is really different from like directly managing people. Because now you're talking like overarching strategy, right? There should be different tracks. And if you're going to be like the high level manager guy, then there should be a track for you to get there where every step along the way involves that kind of strategic planning. Zero Hedge tweeting from the market report. Suppliers have been able to command higher prices due to the strength of demand for inputs, pushing material costs higher at a rate not seen since 2008. Okay, so we're at the moment we're still seeing supply constraints that the Federal Reserve sees transitory. Well, isn't dramatic. I say that because they say not since 2008, which is okay. So last recession. Yeah, MBT5 was defined. Well, I don't know if it's very effective at doing that though. I think probably another part of the problem is that we don't really necessarily understand why certain people are good at those things and that certain people aren't. What truly makes somebody a good CEO or a good manager? I think that there's been a lot of study put into this and that we're not 100% sure. The script for streaming didn't rise organically like most something else is being intentionally piped into soft unwitting. Well, here's the thing, Andrew. I don't think that you have to assume some vast conspiracy to misinform people to see why things have gotten to the way that they are, right? Like I've already explained how culture, how the introduction of the internet and the changes that we have had in culture because of the internet have kind of influenced these things, right? When I first started doing this, the internet, online communities, you were arguing with somebody on the forum, you made a claim of some sort and you didn't cite your source, you would get eviscerated. Now it's like everybody just makes every kind of claim, and this is just the way that people tend to go anyways. They're lazy. They have the internet. I don't have to think for myself. I can just do what the internet says. Makes sense. And you know what? For most things, it probably works. It just doesn't work for trading. Because again, where you're going to find some of the best edge is in things that are believed to be known but are not actually true. And now it's more like you cite your source and people dig and find a criticism of the source, find it, and then render the source invalid because of it. Yeah. For political things, that's definitely the case. So you go and find a news story that says this is what happened, and then they'll say, well, but that's on Fox News. I was like, well, I mean, yeah, it's on Fox News because nobody else would report on it. That doesn't change the fact that it happens. I suspect the Fed has no clue and are biased based on hope and how the market is behaving. I don't know. I'm not quite sure I understand why. Well, actually, no, I think I do. I think that the bias that the Fed has is that the Federal Reserve is a really good institution. And you know what? It is a really good institution. And I disagree with a lot of people on this, but I got to tell you what, a very large portion of the success that we've had in America over the last 100 years is because of the Federal Reserve. Okay. Before the Federal Reserve, you would have like an economic crash like every 5 years. Okay. The Federal Reserve is an important institution. And, managing the economy, having something that is counter-cyclical to break up when we overshoot and when we're undershooting, that's a necessary and good thing. Okay. But I think that the Federal Reserve kind of like that turns into like we can do no wrong or something. When, as far as I can tell, ever since I've been watching them, they're always just a little bit late to the party. You know what I mean? Though because they have to base all of their decisions off of, maybe it's a problem natural to having a committee like that and everything, right? Like if you're going to make a decision that affects the whole economy, like you better be right about it. Yeah. Okay. I can't come in and speculate that the inflation is going to be transitory unless I like really know that for sure. Because otherwise I'm gambling with like the whole economy, We can do that as traders. They can't do that at the Federal Reserve. So they would really need to see some. So the question really should turn into, okay, what would you need to see to prove to the Federal Reserve that it's not transitory? Well, the first thing is that we would actually need to see some CPI inflation, which would probably necessitate the housing moratorium to end. And then we would need to see some evidence where a supply chain there's no problems in it at all, and prices continue moving up. And it would be one that's pertinent to CPI. And so far, because we haven't seen that, you're not going to see the Federal Reserve act, because they have to act on facts and something speculative. They are gambling. Well, I don't think they see it that way. I think they see it as we're going to make decisions based on our data. And until their data reflects it, they can't trade off of it. You know? That's why they're always just a little bit late to everything. I'm not sure if there's really a solution to that, because if they started making speculative plays like that, it would be considered unfair. So they kind of have to have a system that is extremely objective and systematic, essentially. Now, in all fairness, there are places where they exercise discretion that I'm not 100% convinced that it's 100 always based on the data, you know? Let short-term rates be driven by the market? Well, if they did that, we'd be screwed, right? Like, honestly. I think that they truly intend on letting it drop at some point, right? They're not going to let it drop until they believe that all of the supply chains and everything have been rebuilt and are stable, so that whatever kind of downside occurs, that the economy can handle it without completely collapsing. How do you know? How do you know that it's not? Like, here again, we're not talking about, like, none of us have a time machine. Okay, so let's focus. We got the ISM manufacturing number come out. ISM manufacturing prices, we're looking for a reading of 86, and construction spending, we're looking for a reading of 2%, and the manufacturing PMI, we're looking for 65. Okay. Prices was higher than expected. The ISM manufacturing PMI was 60.7 versus 65, and hence the sell. And the construction spending, I'm getting spot 2 versus an estimated 2%. So, actually across the board, somewhat negative numbers. And look, the Treasuries moving higher. Do you think that the Treasuries knew that that was coming? And the dollar weakening. So I'm not quite sure where do the equities go from here. They could completely shrug it off. Man alive, look at that. Woo. Them treasuries. Them treasuries buying that. Holy crap. Like, it was a strong move at 04 was where we were last looking at it. Well, that was way back here, right? And then before the news, we were at 05, and then that whole thing has just been off of the news. Now, the equity is not reacting that strongly to it, but, man. So, again, my ISM manufacturing prices, 89.6 versus 86. So I think that might be a big part of why the treasuries are freaking out here, is there's more of these signs of inflation coming around. And I think that any one of these that we see, you would think that signs of inflation would be, well, actually, So normally, inflation being high would mean Federal Reserve is going to increase rates and we're going to drop. But I think we're getting back into this thing where, depending on how good things are, there's like less likelihood of further monetary stimulus and stuff, like fiscal stimulus. So you kind of get these bizarre moves in treasuries that are a little off of what they normally are. People are afraid that the market may force the Fed's hand. Yeah. But here again, if you're really super concerned about inflation, shouldn't you be selling the treasuries, right? You're afraid that the Federal Reserve is going to have to raise interest rates. But they're buying them today. Yeah. So the dollar took a plunge there. Yen up, gold up, oil up. What about copper? Copper up slightly. What about the yield curve? Okay, well, in the 2s and 10s off of that news, we saw considerable steepening. Actually, across the curve, we saw steepening. So they flooded into those 5 years like crazy. So I don't think that was necessarily because they saw inflation. I think that it's more that they just read that ISM number was bad. Now, that doesn't mean that it's going to be a down day, per se. They might trade down for a little bit and then kind of base out and move up in the end. I mean, they've been doing that a lot lately. The yen, like, right at the high of the day, just pushing up. I missed it. It's like I could maybe get a good spot there, but it didn't. Okay. Maybe a little bit support above 41.94 in the E-mini. Okay. Oh yeah, very nice. Okay. Ta-da! Very happy with that one too. You know what? So I was thinking, because on Thursday and Friday didn't really do too hot, right? On Friday after the stream, I switched over to the experimental account and started trying to take like big trades, and like nothing went anywhere. And I'm like, what am I doing? I think that I was just tired at the end of the week, you know? Of course, I'm tired right now, but so far we've done pretty okay, so. Denmark to allow use of J&J and AstraZeneca's COVID-19 vaccines on a voluntary basis. Zero Hedge tweets supply chain disruptions marked a record. Resurgent prices amid mixed manufacturing survey data. You know what? It is just really hot in this room. Let's see what our Nest thermostat's doing here. I am not a fan of the Nest thermostat. I think it sucks. Well, it says it's 69, so... Okay, so treasuries are backing off a little bit, and E-mini taking a pretty quick run up there. Zero Hedge says there's a technical term for economic slowdown coupled with soaring prices. I mean, there was definitely a significant reaction to that report, so particularly treasuries. Enough so in treasuries that it makes you wonder, was somebody betting that all time that we were going to move up off of the PMI number? That the number was going to be bad and a reason to move up? Gotta wonder. Long NQs will exit at 9:33. Well, that's pretty far up there, but tell you what, let's look at something over here. So there's a video on my channel which is how to use, I'll find it. Talks about how to use the VIX to kind of estimate how far we might go on a particular day. So, in the E-mini, we go to 42.24. We go to NQ. $13,870. Okay, so 9:30 is within reason for the day. Whether we actually turn up, though, I'm unsure still. Also kind of depends where you're long from. So silver's taken off here. I see some people in chat starting to talk about it. People on the Discord. Oh yeah. Oh baby. Oh baby. That's looking nice. Wait. Can we get further out? Yeah. A long way to go, though, but that kind of a move right there. Yeah. That could definitely trigger systematic trading systems coming in long into gold and silver. It almost makes me want to go over and buy AG calls, but then like never seems to work out for me, so I will refrain. Well, let's go and look at them anyways, shall we? Okay, well, Tesla took a pretty deep dive today and is bouncing back. That's interesting, isn't it? I was just sitting there thinking to myself, and then all of a sudden I was like, oh, wait, we were waiting for something. Wake back up, Seth. GameStop down today, back to 172. But let's come and look at AG in particular. Ooh, AG, yeah. So anything above 17 would be really good for them. But if I just, let's just come back to this charts for just a second. Let's see if I can pull up the correct chain. Oh my. So when you come back to here, we're basically at 16. So they're asking for $1. $1 for what, 1 week? 18 days. $1 for 18 days. $2 for 30 days. Okay. So they are certainly positively skewed, but I'm not so sure that I can make a call that they're going to move more than that. Your portfolio overall is doing pretty okay today. Largely in part because of that, though. Sumo Logic continues to struggle at 18. Maybe you want to buy that at some point. Okay, well, the equity index is back up here. Dollar continues to look weak. I think I might try one in here. Uh-oh, here, I'll have it read out this one from Win.
Winston's mom says that joke incoming. A guy goes to his doctor because he can see into the future. The doctor asks him, "How long have you suffered from that condition?" The guy tells him, "Since next Monday." Winston's mom says, "Speculators, listen to my voice and do exactly what I say. You want to buy all of us some new pants. Pants? Buy everybody a pair of pants. Sleepy now and dreaming of pants."
Oh. I wear shorts. I haven't worn like pants in several months. I'm kind of digging this. Hey, you can just wear. So I was thinking about, instead of going over here in the E-mini, I was thinking about trying to take another one tick out of this. I don't know if I would have gotten filled at the 120, but I had the right idea. Now they're all back up there. I'm going to reset it. State Department denies reports of Iran prisoner swap for $7 billion in unfrozen funds. Really? That's interesting. Who reported that then? I saw that headline this morning. I was like, they wouldn't do that. Why are they doing that? And we're going to come back later and we're going to find out why they haven't. There's going to be something sketch going on. Darn, you woke up. Yes. This is so weird. I haven't felt this tired in a long time. But I must not be getting to sleep. I can only imagine that I'd be like this if I wasn't getting enough sleep. And I didn't get like 8 hours last night or anything, so. I also need to work out hard today. Last week missed it a lot because my wife was doing things and I had to watch the baby, but. So there was a downtick in the treasuries, but they all ticked down. Unfortunately, that report is true. There's no agreement to release these 4 Americans. So a bit more aggressive of a sell side excursion there in the equities, and the treasuries maybe bidding back up a tad. Well, the dollar has been getting pressured pretty heavily. Remember earlier when it was like at 91? Like, they're going to go for 91 right on the open. Now we're at 90 spot 86. A little bit of a consolidation area for now. Facebook Independent Oversight Board plans to announce on Wednesday whether it will reinstate former President Donald Trump's account after he was banned from social media platform in the aftermath of the January 6th insurrection in the United States Capitol. I think that even if they unbanned him, he wouldn't go back. Well, for the moment in the E-mini, it's kind of a grind. Slow grind. Stay awake, Seth. Stay awake. You know, like my leg is bouncing everywhere. I don't know if you can hear it. Well, my leg is feeling really bouncy, and yet I still feel sleepy. I don't know how that works, right? Ouch. Another little push down. They're digging. They're really trying to hold that open, though. The bulls are. So, I don't know. Deutsche Bank AG predicts the Chinese yuan may rally further on strong inflows while recommending cautious stance on the Turkish lira. So once again, buyers dig it out, not beating out the previous bar yet, though. And Treasuries still sitting right off their highs. The dollar's still arranging. And another one. So that looked pretty aggressive. I was falling asleep a little bit there, but it looked pretty aggressive. About 1,000 contracts sold there. All things considered, they did an okay job there of holding it. So the interesting price action, if you come back here and watch it on the 1 minute chart. So don't get me wrong. I'm not suggesting that what I'm about to show you has any probability of more likelihood of predicting the action. I'm just pointing out that it's a little unusual. Okay. So the news came out right here. Okay. So on the news, we had a bearish candle. We came right to where the ATR stop is. So remember, this is like a good trend filter just because they will come and test it very often and then flip. Kind of like this. We'll break it. We'll break it. We'll break it. They go for this line. They'll go for this line, and then it's like this is like the stop out line. The stop and reverse there. Okay. So here's a candle. It was a pretty good up candle, but it came back. Pretty good up candle. Okay, but it wasn't able to break higher. And so then they did break higher. And when they broke higher, somebody came in and sold 1,000 and smashed it back down. Yeah. And we can see that in our chart on the other screen, right? You can see right there that little decreasing basically went from 0 cumulative delta to negative 1550 or so. So 1,000 sold. And that probably stopped me out too, huh? Yep, stopped me out. Stopped me out, but it remains slightly tilted bullish. That 30 years seems to still be trying to drag them along. Like that right there might be worth the one tick. Oh, yeah. In fact, let's do this. If they so choose, because this has been such a strong trend day in the Treasuries that what we've got set up here, I'd say, is a better than 50% chance that they're going to break through 15. In fact, I would say the chances that they touch 16 are pretty high. Look at him squeeze. Oh, yeah. So they're doing the ramp thing. You see this sometimes in this sort of situation where it's like they'll kind of pull off it. You see they went to 3,400 and then they'll go to 4. And they'll go to 3,500 and then they'll go to 4. So they're trying to scare these guys out. I mean, they intend on pushing through that price, but I don't think that they want to have to buy all of them. I think that they would rather see somebody pulling it, shoot through. Now, the E-mini went and hit our stop, right? But now it's right back up there. I probably didn't get the best spot, but this price action is a little bit too crowded. I don't know if I should risk it again. Okay, so down ticked. They can still buy it up. Not the healthiest bid. You need, oh yeah. Oh, did you see them hit that? Woo! So that almost cleared and that was 28. Remember, the earlier was 47. pulling. I don't know if that one's okay. So I tried to take a limit order at 15 and it didn't work. So I decided to just take it off. Oof. I managed that well though still. I'm very happy. That could go much further though still. Ooh, I don't know, man. These are those that I can remember in Treasuries doing plays like this and thinking, oh, like it could go to here, it could go to here. And it just going through like every spot that I possibly thought. So, oh wow. So 16 is a resistance point from the 25th, which was like what, a Thursday? No. It's Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, it was a Monday. So basically we're at last week's high. Maybe part of why there's so much volume there is 16. Well, I got about 30 minutes left. Don't let me go past. I've been going past over and over again and need to stop that. I need to stop at 9 o'clock. Oh, did Jay decide to take a trade? So I have to say, Jay hasn't been taking very many trades. But since I changed him up and tried this new setup with him, he's been doing pretty good. I'm not going to touch him. We'll see how he does over the whole week. But I'm going to bet you that he takes one trade every day and, you know, after 5 days, that'll be like $15 or something. I wish he traded more, but. Okay, so now look at the huge iceberg at 15.5. Incoming downside, HF says. You think that the indexes are going to turn back down? What was the it was the market numbers. Feeling a little bit more awake. Taking a trade and getting a win, that's like just a little bit of neurochemical. Keep me awake. All right, the E-mini looks like it's going to go for them highs again. Dollar extends lower. Gold is the winner today, man. I really wonder, is this, I think that the move we're seeing here in the treasuries is kind of more of this, the reflex dynamic that you get in the treasuries, which is like when the economy is doing well, treasuries tend to move down, and when the economy is doing poorly, treasuries tend to move up. Seems to be screwed up because the anticipation of further fiscal stimulus matters more. And so if they come in and they say like the market is doing okay, we might not have to do that stimulus, and so they move up. But I don't know. Those numbers were kind of mixed. So I'm not, in this particular case, I feel a little behind the curve here. I'm not 100% sure what number they're reacting to or what the dynamic is that we should be looking to as to why the treasuries moved up the way that they did. And similarly on the E-mini, there just seems to be like a real battle going on. I mean, there was a real battle going on most of last week, where the Bulls would win, but they had to fight for it, and it was really difficult. And you're seeing this again, like we've had a strong sell there, and that the buyers are digging it out and almost pivoting up above 41.98. They might not do it though. I might just be screwed here. Maybe I should just stick to my treasures because I feel like the treasury trade is, I've been doing better. Oops, that's not what I wanted. Wrong button. Curious. Okay, well, it did it. That's fine. One more. Intel CEO says chip shortage could last a couple of years in new 60 Minutes interview. Oh, jeez. This sucks. I wish I had updated my computer last year, man. Patrick Rooney says bid-ask spread has tightened considerably for micro Bitcoin futures at the CME Group. Well, now I want to look at it. You got me. You got me, CME. Now I'm interested. Download instruments. Nope, that didn't pull it up for me. Maybe I need to just select everything. Nope. Okay, well, the Treasury is pulled back quite a bit. Looks like they weren't able to crash through 16, and things are kind of coming back pretty quick. Still just right by the open there, by the way.
Block sell.
Ouch, them Treasuries coming down hard. See, it gives me the Bitcoin futures, but not mini Bitcoin. Well, they're kind of at the point where they might just like revert back up. Yeah. I feel like I'm just so out of sync with the E-mini lately. Like, I kept this on the experimentation account. I was like, well, let's do it just the experimentation till we get a winner, and then we can go back to the serious account. And I'm still not getting it. No. Well, we could just look at the Bitcoin futures. Let's see here. We got April. No, that's not what we want. We want May or June. I don't know which ones. Should be on June, huh? Yeah, there's not a lot. Wow. It's probably not going to be a lot anyways. Huh. Oh, mine is still on April. Have I missed a rollover in Bitcoin? Yes. Okay, so it is May. Oh yeah, you go to June, there's like nothing. Okay, so we'll just do May, and we got like a what? Seven tick spread. It's quite a bit, actually, still. If it had gotten down to like 1 tick spread, and I would maybe be willing to try and arbitrage it, but close it and relax tomorrow will be another day. Yeah, well, you know, it was okay on the Treasuries. Like, that's a, you know, I'm wondering. So the question is it, so where's the problem? One problem could just be we're not going up in the E-mini, and I think that a lot of the edge of why I've been doing well in the E-mini over the last couple of months is mostly just because it's been going long. But I think another issue that I might be facing is that I spent a lot of time watching the Treasury, so I'm kind of more in sync with the Treasury than I am in the E-mini, you know? But it is in more of a reversion setup. Slightly frustrating. Okay, so now that we get the Bitcoin, we can see it's at 58, but it's still not to 60K. The look at the meta order, the sell meta order is just relentless today. It's not real orders right now. We'll stick around until the top of the hour, of course. So the solution is not to give up. The solution is to figure out where you're messing up at. I believe that where I've been messing up at has just been trying to take along. It's still fighting me a little bit, though. I'm having a very difficult time getting any kind of favorable excursion there. But we can sit and chat for about 5 more minutes. 17 likes, by the way. Thank you guys very much. I am really quite surprised with the "What do you plan for today's title?" Good, you know, thank you for bringing that up, Win. I think that today we're going to say Treasury and Silver AG skyrockets, yeah? Oh, by the way, if I am as lucky. So this is the first one that I've actually caught some real favorable excursion on, so. Let's see here. I wonder. Okay, so I did finally get a fill. That's good. I wonder, on swaggy stocks right now, a real-time sentiment, or rather ticker sentiment. Let's see here. SPY, Tesla, CLOV, GME, MBIS, OCGN, PLTR, AMD, Apple, BFE, TLRY, Viacom, Rect, AMC, NEO, VXRT, Amazon Coin, Alpha, SLV. Okay, so SLV is the moving. So we'll do SLV. AG. I mean, so here's the thing. Skyrockets, there you go. Good title. Except for that I have to spell treasuries correctly. Treasuries. Okay, save. There we go. Updated title. Yeah, and make sure you click that like button before we go. 20 viewers, 20 likes. You guys are so great. I don't even have to say anything. I just... Why am I blessed? Why am I blessed with such a great audience? I don't deserve it, guys. I really don't. But anyways... I tell you what, I said this before. I was a little frustrated last week because silver just hadn't been going. But now today, we're finally getting kind of like that technical breakout that I think is really going to like attract people's attention. I think that if people are concerned about inflation, that we should see silver and gold go up. But the issue has been that the treasury yields have been increasing, and that kind of increases the costs for people to hold this stuff. And so it's been difficult that way. Well, if treasury yields are going to back off, but people are still concerned about inflation, then maybe silver and gold can take off from here. And you're getting a pretty good momentum right here that could bring some more people in. And then if we get back up to the area that we had around the time that there was like the pump in silver because of Wall Street bets and stuff, then I think we could have a good trade. And the fact that I'm coming in here and I'm seeing swaggy stocks, the SLV is showing up. And look, lots of mentions of it yesterday and today. So the sentiment on it, they were ready for it starting today. You ain't going to do a little bit more investigation off of that, but we may finally start to see the silver and gold trade take off here. So I'm happy about that. Okay, guys. Thank you very much. Well, you know what? I'm just gonna see what this one brings. I think that if I'm gonna just try and hold this one. Yeah, I'll just try and hold it. We'll see what it does if they actually like straight up turn down, because I think that my risk reward on the downside is pretty good. But all of these sim trades we're putting them in the throwaway account, which is to say that I still feel that my trading in the E-mini is not quite up to snuff, and then I need to prove myself again before I put myself in the serious account. So, and the ZN one is just all experimental for now. But you know what? I wasn't so great on Thursday, Friday, but today we caught, 3? Yeah, 1, 2, 3. Caught 3 good treasury trades. Probably could have caught more of that. Last one was worth 2 ticks, so we made 4 ticks. And hey, if I could come in and make 4 ticks every day in the treasury, I would be so happy. If I can be that accurate every day, which is the goal with that strategy. So, feeling happy about that too. See you guys tomorrow. Stay profitable, friends.